Hey, Semilolu here, and in this video I want to talk about the difference between options and cryptocurrency. Options versus cryptocurrency. Only because, as most of you know, I have been into cryptocurrency over the past at least 6 months, maybe even 7 months, but because the market is quite deflated right now, I started looking around for other things I can do to make money, basically, because my money right now is in cryptocurrency and I plan to leave it there for the long term. I'm not selling any more cryptos. I'm not buying any more right now. I'm just leaving what I've already purchased in as an investment, as a long-term investment. So looking around, I started looking into options, and it's quite exciting what I've found. So let's keep it rolling. Options versus cryptocurrency. Options are contracts. Simply, an option is a contract. It's a contract that gives you the right to purchase or sell an underlying asset. That means to sell or buy a stock at a set price on or before a certain date. Okay, so we're still sort of trading stock, but we're not actually trading the stock. We're trading the right to purchase or sell that stock. That right is called an option, and it costs money. It's called the premium, but it doesn't cost anywhere as near the price of the stock itself. For instance, the price of let me think, I think it's Amazon is about $1,100, let's call it $1,000. To purchase 100 stock of Amazon, I would need $100,000. However, to purchase the contract or the option would cost me probably anywhere from $200 to $500 to $800, depending on which particular option I want to purchase. Now, the right to buy an option is called a call option, and the right to sell is called a put option. So, just trying to give you a general summary of options. So I've already gone over the fact that with options, you don't actually have to buy the stock. What you're buying is the right to buy or sell the stock. It's quite a neat concept. Sometimes I feel it's a little hard to get one's mind around it, but you gotta stick with it long enough to really understand that you can be just as profitable trading options as trading stock or cryptocurrency. Now, bear in mind that one contract is equivalent to 100 shares. One contract is equivalent to 100 shares. Now, at this point, I'm going to move over to another screen. So give me a minute. And on this screen, I've just highlighted 3 aspects to options and cryptocurrency that have kind of made me want to know more and to dig into options as compared to cryptocurrency. So the very first thing is, and probably one of the things that attracted me to options, is the fact that here you can actually trade a greater number of stock, a greater number of shares using option trading. You can trade a greater number of shares. With cryptocurrency, to trade 100 Bitcoin at today's price of about $6,200, you need $620,000 to trade with 100 Bitcoin. Not so with options. I can trade 100 Bitcoins, but what I'm doing is I'm not actually trading the stock, I'm trading the option. Now, the option itself is way cheaper than if I were to purchase the actual underlying stock. The same as the premium for the insurance on your house is way, way, way less than the actual insurance amount, the amount that your house is insured for. And that is exactly what options, how options compares to regular stock trading. The second point is there's no need to purchase the actual stock when trading options. You never need to actually purchase the stock. You can if you want to, but there's no need to. If you're into options because you're into make money, well, you don't have to purchase the stock. Of course, with cryptocurrency, to make the money, either you're investing in cryptocurrency over the long term, or you're investing just momentarily just to take advantage of the upward movement. Now, as we know with cryptocurrency, there has not been a lot of upward movement for most of this year. And so that's been an issue for those of us who have been trading the volatility of the cryptocurrency. Okay, and the very third point is an option to purchase 100 shares is way much cheaper than, say, to purchase the actual 100 shares of the actual stock. And I already used that illustration already. To purchase 100 Bitcoin at today's price of $6,200, $6,200, I would need like $620,000. Not so with options. All I need is to actually purchase the option or the premium, if you like. And with that premium, I can trade and I can make just as much money as I would make if, say, I was trading with the actual stock. Now, at this point, I'm going to show you the platform from which I have been trading. Now, I haven't been trading real money. I have been trading paper money, and that is like the number one advice before you move into options. Really, you just don't want to go in so excited, thinking you know it all, because at the end of the day, if you make a mistake, you lose money. So you really want to start off trading paper money. And I started trading my account with $10,000, so I'll move over to that platform right now. Okay, so here it is, and this platform is called Thinkorswim. You can get it on TD Ameritrade. That's the platform that I'm using right now, and it really works. Now, I must say up front, it is a little difficult. It is a little complex to really understand TD Ameritrade's paper trading platform. It's called Thinkorswim, and it's not just paper trading actually. Once you fund your account with money, of course you can start trading on their platform. But for me, I will be trading using another platform. I'll be talking about that a little later. And I'm simply using Ameritrade's Thinkorswim platform to learn how to trade. Now, I'm going to show you some key points. Now, this is as of today. So this is what I traded today. Today being the 12th of July, 2018. I traded a couple of stock, and Amazon is, I'll just use Amazon as an example. The price of Amazon as of today was $1,795, so call it $1,800. So if I want to trade 100 of these, I would need 180,000. That's a lot of money. Okay. 1,800 and 100, let me see, 180,000. Okay, well, in this case, we're trading the option. Now, here are the option prices. This is the beauty of options. You see these numbers here? These are weekly options. What happens with weekly options is you purchase the right to buy or the right to sell an option. On the left side here is where you buy, and on the right side are the puts, and these are the, when you buy the right to sell. Here we're buying the right to buy. So you're going to buy calls when you know the price of the stock is going up. You're going to buy puts when you know and you figured out that the price of the stock is going down. So another beauty of options is whether the market is going up or down, you can still make money. Don't you just love it? Maybe not quite the case with Bitcoin right now or with any of the other cryptocurrencies. Okay, so let's keep moving. So the price of Amazon is $1,800, but this is the price of the premiums. Now, let's target this $5.50 premium. So this is the cost. It will cost me $5.50 to buy one option. Now, I'll say that again, to buy one stock. Now, an option is made up of 100 stocks or 100 shares. I think shares is a better word. And so to buy one contract, that's one option, of Amazon, I could purchase this particular one and it would cost me $550. So you're taking these numbers and you are multiplying them by 100. So this one here would cost $650, this one $550, and this one $855. And it's just the right to buy. But we're trading. We're going to trade with this, with these options right here. So let's follow this 550. And they all expire tomorrow. So today's Thursday. Weekly options expire on the Friday. Monthly options are different and they expire after a whole month. The strike price for this $550 option is $1,800. So I'm buying the right, not the stock. I'm buying the right to purchase Amazon at $1,800. Now, if I had purchased this option 7 days ago, then what I would have been saying is, yes, I know the price of, let's say 7 days ago, the price of Amazon was just $1,700. Okay, today is $1,795. Well, let's say 6 days ago it was $1,700. Well, I am buying for $550 the right to purchase Amazon at $1,800. So of course, it would be nice if the price of Amazon goes up. So by the time I'm ready to trade my option, which I purchased at $550, the hope is that the price of Amazon would have gone up and would be more than $1,800. When the price of this strike price, it's called the strike price, when this goes up, more often than not, the price of the actual option will go up. And as we get closer to expiration date, which is Friday, the price of this option will also go up. So at the time I bought it, maybe 6 days ago, it was $550. 2 days later or 3 days later, or even 10 minutes later or 1 minute later, it just depends, this option could now be worth $10. That means I purchased it at $550 and now it's worth $10. That is what I would trade. I would trade the option I bought at $550, and once the price of the option goes up, because the stock is doing well and the price is going up, then I would be able to sell my option that I bought for $550 for whatever the increased price of the option is. That is the trade right there. Here, position statement, it shows the position of the options I purchased today. And here, if we follow this line, you can see that by the end of today, I made $4,150 on Amazon, $2,555 on Google, and I lost $1,588 on Netflix. Of course, again, I'm trading paper money, and I made a total profit of $5,000 plus, just to show the amount of money you can make trading options. And I'll say quickly also, I was trading with $10,000, and today I think I used, of the $10,000, I used, I don't know, maybe something like 6,000, 4,000, 5,000, 6,000 to actually purchase these. I hope you've learned something. If you have, give me a quick like and don't forget to subscribe to my channel. I'll meet you on the next one.